The biggest IPO in history just broke its own launch price. Tonight, 5 legends rescore SpaceX after its 40% collapse and name who got it wrong. Because the loudest bank on Wall Street calls this crash a gift, says it is still going to 10 trillion. If you own it or you are eyeing the dip, by the end of this session you will know which side is wrong, before the market does.
Start with the receipts. In June, this board gave SpaceX a 3.8, its lowest score ever, while the order book was oversubscribed several times over. Then the chart obeyed the file. So tonight's question is not whether the board was right, it is whether it should stay right. The board reconvened in July 2026. These are the numbers the legends saw. On the docket, the fastest fortune ever minted, deflated, what the machine really earns, and one score that moves the way nobody expects, sealed till the end. June 12th, priced at 135, opens at 150, closes up 19%, 2.1 trillion by the bell. Sounds like the top, it wasn't, not even close. 75 billion raised in one morning, triple Aramco's old record. By one count, retail bought more of this stock in week 1 than the whole Magnificent Seven combined. Everyone believed, hold that thought. By that first closing bell, the founder had become, on paper, the first human being worth $1 trillion. 4 days later, the market decided even that was thinking too small. June 16th, 225.64 at the high, roughly $2.6 trillion. It lasted one afternoon. What killed it was not a headline, it was plumbing. 15 trading days in, the stock was swept into the Nasdaq 100, reportedly the fastest inclusion ever. Index funds had to buy billions into a 3% float. When the forced buying finished, nobody stood behind it, and the sellers already on the calendar. The first insider lockup opens right after the June quarter earnings. About $123 billion of stock, bigger than the entire float it lands on. Every legend tonight will circle that date. Then the product spoke. Mid-July, the first Starship attempt since listing died in the final second. Booster engines refused to light. To an engineer, a scrub is a Tuesday. To a stock priced on a perfect decade, it was a verdict. By the third Friday of July, the round trip was complete, through the launch price into the low 120s, more than 40% off the peak. The mania was gone, and what it left behind is where money gets made or lost. The casualties had famous names. Australia's richest person reportedly put in over $1 billion, then watched an estimated 700 million Australian dollars of paper profit evaporate. The retail wave sat underwater beside her and kept buying the dip, should they? Because Wall Street did not converge, it split 12-1. The wildest bull held his call, $800 a share, a $10.5 trillion company, more than 2 Nvidias. The most careful fair value sits near 63. Someone's model is broken, the board finds out whose. One referee ran the tape before the listing even priced. The dean of valuation put intrinsic value near 1.3 trillion, roughly $100 a share, below even the crashed price. Remember that number when the board votes. But this board scores a machine, not a ticker. And while the ticker fell apart, the machine kept flying. 90 seconds on what the world finally got to audit, including one number the bulls never mention. For the first time ever, the numbers are audited. 18.7 billion in revenue. A net loss near 5 billion swung from profit a year earlier. The most valuable industrial startup on Earth runs at a loss. So where does the money live? Launch is the moat made visible. 165 launches in 1 year, over 80% of all mass humanity lifted to orbit. Yet the audited file shows the rocket segment ran at a loss, dragged by Starship spending. The dish on the roof took over. Starlink, 11.4 billion in revenue, 4.4 billion of operating income. The only engine in the empire that makes money. Every launch carrying another satellite stack feeds itself, but the flywheel has a counterweight. Growth is coming from people who pay less. 10 million subscribers, but revenue per user slid from $99 towards $66. More users, thinner slices, a utility being born, and markets price utilities like utilities, not like miracles. There is a treadmill hidden in the sky. The The satellites wear out in 3 to 5 years and must be replaced thousands forever. The constellation's yearly capital bill roughly equals everything Starlink earns. That is not growth, it is maintenance dressed as ambition. And the circularity the file cannot hide. 122 of those launches carried the company's own satellites. The launch business's biggest customer is itself, an empire whose parts buy from each other while one product pays for all of it. The next decade rests on Starship, the fully reusable heavy lifter meant to crush the cost of orbit. In May, a booster came apart. In July, the countdown died on the pad. Bulls call that iteration. Bears call it the weakest bolt in a $10 trillion promise, which is it. And bolted on, the merger nobody voted on, an AI lab in the same ticker, losing $6 billion a year on $3 billion of revenue. One machine prints, one burns, one is not built yet. Now, the price, the June page is waiting. Open the June page, 3.8, spread 2 to 6, and one line that aged like prophecy. When insiders price above their own last trade, that is the sound of a top. Tonight each legend reruns his model. One changes his mind and it is not the one you think. The oldest test first. The Graham screen asks one question, where is the floor? In June it answered, there is none. July agreed, now it reruns the wreckage.
Rerun the screen in the low 120s and the arithmetic barely moves. Still roughly 90 times sales. Still loss-making. Still double the most conservative fair value on the street. A crash that ends at twice fair value is not a bargain. It is a smaller mistake. Graham's oldest warning, new issues are sold when it suits the seller, is now a calendar entry. The insiders who set the price are weeks from selling into it. The screen does not buy what informed sellers are queuing to unload. So the model repeats itself unmoved. The mania is gone, but the price is still speculation wearing the costume of investing. A 2, again.
But one voice never cared what a ticker does on a Tuesday. He grades machines, and this file holds the finest he has ever graded. The Fisher test, a live research engine, management depth, decades of runway, find what you would hold for 20 years. In June, this was the only voice above a 4.
On the machine itself, nothing broke. The boosters still land. The constellation still compounds. The customers have nowhere else to go. The company he admired near the top now sells below its listing price. For a 20-year owner, the entry just improved by nearly half. The scuttlebutt flags did not clear. A founder split 5 ways, an AI furnace welded to the hull, and now an ignition wobble on the very product the premium is priced on. The quality is intact. The wrapper is still ugly. But this discipline scores the business first and the tantrum second. Cheaper entry, unchanged machine, a 7, the first score in this file's history to go up while the chart went down.
The next chair has heard wonderful business 10,000 times. His one question, what does it earn for its owner? The answer decides everything. The Buffett model, owner earnings first. Then the price a sane private buyer would pay for the whole thing, and an allergy to initial offerings that has held for 60 years.
The answer has not changed its sign. The empire consumed nearly $5 billion of its owner's money last year, and its cash pile shrank $9 billion in the March quarter alone. A wonderful business on a bad day interests him only at a wonderful price. This is not that price. As for the discount, when it arrives on the same calendar as a $100 billion insider unlock, you are not being offered a bargain. You are being offered somebody's exit. Guess how that movie ends. So the model keeps its ground and keeps its cash. A 3, perfectly comfortable being early and perfectly comfortable being last. But wait until you hear what the next chair did with the exact same facts.
Then the sternest mind in the room turned the file upside down, and for the first time, something in his model moved. The Munger model refuses to ask how you win, it asks how you lose. In June, it counted 4 ways. Tonight it recounts and finds a 5th.
How do you lose from here? Pay double fair value, still true. One founder, 85% of the votes, still true. The AI furnace still burning. And the new one, Arrival Abroad, has reportedly landed a reusable rocket. The first crack in the moat everyone swore was 10 years wide. But invert the inversion. The same machine now sells for 45% less foolishness. The model never rewards a falling knife, it does acknowledge when the price of stupidity drops by half. So the sternest scorecard in the room moves by exactly one notch. A 5, the moat is real. The terms are still written in someone else's favor.
One chair left, the man who trades the panic everyone else runs from. His June line is why this session exists, the swing vote. The Druckenmiller model reads liquidity first, positioning second, price last. In June it said, rent it, never marry it, and called the insider pricing the sound of a top. The top arrived 4 days later.
Tonight, the tape says the tide itself turned. The forced index buying came and went without holding the price, mechanical demand, not conviction. And the reported turn toward tighter money is whether a 90 times sales story cannot fly in. He does not fight a draining sea. But look at the other side. A supply wall everyone can see. A crowded short bet. 6 straight red sessions. Retail capitulating on schedule. Forced sellers meeting exhausted sellers, the only crowd this model ever buys from. So the swing vote splits the difference and sets a tripwire. A 5. Rent the panic if the rocket flies and the unlock clears. Walk away the day the liquidity says no. It is still not a marriage.
Which leaves the tally and a board that has just done something it has never done before. The rescores: Graham 2, Fisher 7, Buffett 3, Munger 5, Druckenmiller 5, Composite 4.4 up from June's 3.8. Read that again, the stock fell by half, the score went up. Why? That answer is the whole episode. And the spread widened, a 2 and a 7 at the same table. That gap is not confusion, it is information. This file prices 2 different futures at once. The lesson under the tally: price is what you pay, value is what the machine earns. July repaired some of the price and none of the machine, a better bet, still not, by this board's math, a good one. The money lens, July 2026. One famous growth fund reportedly went all in within days. A flagship mutual fund holds it top 5. Against them, a reported $25 billion short bet. The real money is split along the board's own fault line. The crowd lens, record inflows on the way up, sentiment flipping bearish on the way down. And the loudest finance videos of the month were the careful ones. Skepticism became the viral position. That usually means the froth is spent, which leaves one question: what flips this board? Triangulate, the method says 4.4 a hold with a 2 and a 7 glaring across it. The money is split. The crowd is capitulating. The disagreement is itself the read. This has stopped being a hype stock. It is a battleground. What turns this verdict either way? 1. Starship flies clean and keeps flying. 2. The August unlock clears without breaking the price. 3. Owner earnings stop bleeding. Watch Starlink's margin against falling revenue per user. Change those 3 lines and every model rescores. The board's standing order on July's numbers: the machine is glorious, the stock is still not cheap, the calendar is armed, a dated verdict is a feature. Rerun these models the day the numbers change. That is the point of owning the method, not the story.
So the board reopened the file, and the score went up while the stock went down. That is the whole lesson in one line. Now it is your seat at the table. Which legend got it wrong? Put your score in the comments and subscribe, because the next time a giant falls 40%, this board convenes the emergency session again. Same table, same cold math.
The board convened in July 2026 on July's numbers. These are AI models of published methods, not the investors themselves, and nothing here is financial advice. The methods are timeless. Rerun them with today's numbers.